Big news for crypto fans and retail investors. Grayscale's large-cap crypto fund just got the green light from the SEC to convert into an ETF. If you've ever wondered why Grayscale's trusts used to trade at wild premiums or discounts, it mostly came down to those pesky lockup periods and no in-kind redemptions. But now, as Grayscale keeps flipping its private trusts into exchange-traded funds, those juicy arbitrage opportunities, they're basically drying up. Here's what that means. The fund's shares should now reflect the real value of the digital assets inside. No more wild swings based on supply, demand, or market weirdness. After a year-long legal battle, a U.S. judge finally called out the SEC last August, saying their denial of Grayscale's conversion request was, quote, arbitrary and capricious. So Grayscale's Bitcoin Trust now trades as an ETF with a 1.5% expense ratio. Yeah, it's pricier than the competition, but it's still the biggest and most profitable Bitcoin investment vehicle out there. So, what's next for crypto ETFs? The SEC is actually thinking about making the approval process a lot easier. Instead of that old, complicated 19B4 filing, issuers could soon just file a standard S1 registration, wait 75 days, and if the SEC doesn't object, they're good to go. That would save a ton of time and paperwork for everyone, and maybe even open the door for more crypto ETFs on the market. Bottom line, Grayscale keeps leading the way, the SEC's finally loosening up, and access to crypto through mainstream investment vehicles is getting easier for everyone. I'll keep you posted as this story develops. Don't forget to like and subscribe for more updates tailored for retail investors. See you next time.